All right, year to date, CleanSpark stock is up by more than 25%. And since the market bottomed in April, CleanSpark is up more than 75%. And if we want to go back to even the bear market of 2022, we can see that CleanSpark has climbed by more than 500%, returning for shareholders tremendous returns over a very short amount of time. Yet if you go on social media, it's like CleanSpark shareholders are just in absolute poverty. One post that I saw today sums it up pretty well. This user posted that Bitcoin is double the price where it was a year ago. CleanSpark has way more facilities under management and contract, way more exahash per second, no dilution. They have way more Bitcoin on their balance sheet. They're more efficient, yet their stock is more than 50% off of all-time highs. What in the actual heck is going on? And this is a very, very fair thing to ponder. What exactly is going on? Because based on the operations and the fundamentals of the company, the things that matter, CleanSpark should be trading much higher than it is today. But it's also times like these where I get really excited and I'm more optimistic than ever before, because if I know there's a mismatch, if things don't make sense in the stock market, there's opportunity. If things always made sense, if things were always priced correctly, there would be no opportunities out there. So right now, I'm actually more excited, more optimistic than ever for CleanSpark stock, even after it's risen more than 500% in just the last 3 to 4 years. I think there's tremendous runway ahead for shareholders like me that have a long-term mindset. But that's the problem. Right now, based on multiple different data points, the stock market and investors within are more speculative and they're chasing more risk than they have in several years. We can look at things like total options volume, where calls now make up nearly 70% of total options volume, which is the highest level since the meme stock frenzy in 2021, and this chart shows it. That is crazy to think about. And Goldman Sachs put out a piece today saying that speculative trading has hit a record high. They said that based on their speculative trading indicator, this is the highest level of speculative trading since the dot-com and pandemic bubbles, driven by heavy trading in unprofitable, penny, and high EV to sales stocks. They say that the trading volumes are high in the Mag 7, digital assets, quantum computing, which all reflects rising risk appetite. And they also mention the call options activity, which has surged to its highest level since 2021. And they also mention IPOs and SPAC issuances reaching a multi-year high, with SPACs raising $9 billion in Q2 alone. Then they note that the retail favorite stock basket is up by 50% since April, highlighting a speculative market tone. Now, what I'm about to say might piss off a lot of you short-term traders. Maybe some of you I can call short-term investors, but I don't think you can invest over a short time period. I'm just going to tell you what my honest thoughts are right now. I don't think CleanSpark wants to be a speculative name. They don't want to be a risk-on name in the stock market. They don't want that investor base. They don't want people to buy their company because they're speculating about, well, maybe this company can increase their Bitcoin per share over time. So it's just natural that if CleanSpark isn't trying to position itself as this speculative, heavily risk-on company, it makes sense that, well, the risk-on and speculative funds would favor other, well, actually risky and actually more speculative names out in the stock market. CleanSpark wants to focus on sustainability. They want to be the adult in the room. They want to be the company that is around forever, that doesn't go bankrupt in the next bear market. And you'll see how all of this plays together in today's video. The risk-on appetite of investors, speculation, all of the new publicly traded Bitcoin treasury companies, and then eventually how all of that is going to crash and burn. And CleanSpark doesn't want to be a part of that. So I can guarantee you today that CleanSpark they've weighed all of their alternatives. They've weighed transitioning completely to HPC and AI, but they see no profits there. We'll discuss that in today's video as well. They've pondered, well, what if we just do go out there and sell shares of our stock? Let's go dilute shareholders and take on a bunch of debt. do a bunch of convertible notes to buy Bitcoin at spot prices, because then people will buy our stock short term, even if we know that long term that doesn't generate profits for shareholders. Let's just do it to get people to buy our stock. No, they don't want to do that. But those are the things that public companies have to weigh. And as an investor, I'm sorry, you have to weigh it too. How much risk do you want to take? But let's talk about this. The number of publicly traded Bitcoin treasury companies has absolutely skyrocketed by more than 150% last I did my math since just December of last year. That's insane. There are now 145 publicly traded Bitcoin treasury companies that have adopted the Michael Saylor approach of diluting shareholders, taking on debt to go buy spot Bitcoin. And they're using terminology like twin turbo, crypto reactor, and Bitcoin torque to generate hype for their stock so they can sell their stock to buy more Bitcoin. And it's just a never-ending flywheel, it seems. And ironically, we just covered how SPACs have made a comeback. This really does remind me of the SPAC craze of several years ago, where management teams were they were entirely reliant on using buzzwords to generate stock price performance so that they could dilute shareholders to raise more money, to keep telling their story in order to keep their stock propped up, the never-ending cycle. And nobody cared about the actual operational business of those SPACs. And today, nobody cares about the actual operational business of these Bitcoin treasury companies. So outside of the ETFs, which yes, inevitably have pulled money and capital away from the Bitcoin mining stocks, Bitcoin mining stocks used to be the only exposure you could get to Bitcoin. That's no longer the case. There's ETFs that hold $173 billion worth of Bitcoin. And inevitably, some of that capital came out of the Bitcoin mining stocks and into the ETFs. But even more so today, it is the Bitcoin treasury companies. And we have to ask, because this is what CleanSpark's management team is asking, how sustainable is that business model? Diluting shareholders, taking on debt to buy Bitcoin at spot prices. And where do the profits come in? And to me, it's very confusing. Michael Saylor will go out there and tell you that MicroStrategy's stock will outperform Bitcoin because it's done so historically. So buy my stock because it's going to keep doing that. But it's very confusing to me because if that's the case, why is Michael Saylor selling MicroStrategy stock to buy Bitcoin? If MicroStrategy stock were going to outperform Bitcoin, wouldn't you want to actually buy back your own stock if you're going to get better returns on your money than if you were to go out and buy Bitcoin? And everybody is upset with Jim Chanos right now, how he is short selling MicroStrategy and going out and buying Bitcoin. But if you really think about that, he's following the Michael Saylor playbook to a T. He's doing exactly what Michael Saylor is doing. He is selling MicroStrategy to go buy Bitcoin. That's what Jim Chanos is doing. Yet all of these MicroStrategy shareholders will get so upset that Jim Chanos has adopted that strategy and is short selling the company. Now, there's a little bit of a problem when it comes to the Michael Saylor strategy. And that's that, well, if the stock trades at a multiple, Michael Saylor will just dilute the stock until it no longer trades at a multiple to keep buying Bitcoin, because that's the only way you get positive Bitcoin yield or increasing Bitcoin per share. But you can see that MicroStrategy's enterprise value has climbed right alongside Bitcoin prices, obviously, yet their multiple to the net asset value has actually been falling as Michael Saylor has been diluting shareholders and raising money via equity financing to go out and buy more Bitcoin to add to the company's balance sheet. And one of the reasons for this is, well, now MicroStrategy has a bunch of competition. It turns out there's no moat involved in going out and raising equity financing or raising financing via equity or debt to buy Bitcoin. There's no moat there, it turns out. So all these companies that are adopting this same strategy are now competing for the same capital pool, which means there's less capital available for each of the participants that have adopted that strategy, which means that MNAV, multiple of the net asset value, is just going to shrink and shrink and shrink and shrink some more. And in fact, today, for MicroStrategy to increase their Bitcoin yield or to make their Bitcoin yield 1%, they would have to raise $1.6 billion. And just 6 months ago, they would have had to raise only $1.0 billion. So the bigger this gets, the more money you have to raise. And I'm sorry, there's just not an endless amount of money. So at this point in the video, we've established that, well, although it's hypey right now, although it's done really well, this strategy really isn't sustainable. And well, these companies, they have debt that's going to come due. Well, the debt's unsecured. No, it's not, because the only assets at these companies, for the most part, is Bitcoin. And if you have to pay down your debt and there's no demand for your stock, you have to sell your Bitcoin, or you're going to have to dilute your stock to oblivion. And that's not a very favorable outcome for shareholders. It takes one bear market for things to really fall apart. And CleanSpark's management team, they don't want anything to do with that. They want to focus on their operating company, delivering operating leverage, something that's actually reasonable to pay a premium for. Operating leverage, accumulating Bitcoin for less than spot prices. That's reason to pay premium for a company, because I can't go out there and do that myself. Whereas with MicroStrategy's Michael Saylor playbook, yeah, I can go out on Coinbase and go buy my own Bitcoin today. I can even go take on debt to go buy my own Bitcoin today. There's no moat there, but it doesn't even stop there. It's not just the ETFs and the publicly traded companies adopting the Michael Saylor strategy that's been pulling capital away from CleanSpark. It's also been, well, the AI trade, because you see a lot of Bitcoin mining companies have initiated full pivots to HPC AI, which stands for high performance computing for artificial intelligence. Everybody knows that AI has been an extremely hot trade. If you successfully use the words AI in your earnings call, your stock price will just absolutely explode. At least that's the way it's been over the last year or two. It's absolutely insane. And despite that, there have been little to no deals getting signed, and there have been very, very little, actually, for some companies, no profits at all, yet the markets are just assigning an incredible amount of value for these companies' HPC and AI businesses. I'll use Iron as an example. They're the most well-known Bitcoin mining company that has started their transition to full-on HPC AI. I'm working on putting out an article on Seeking Alpha, and I'll give you a little bit of a sneak peek today, but I did the math on their hardware payback period, and it really is a very unenticing business to be involved with. But again, that doesn't really matter, because the markets and investors, they don't care about actual fundamentals of companies right now. They care about stock price returns, and if something's been hot, well, I'm going to go out and buy more of it. That's all they care about right now. But if we study Iron's GPU fleet that has been operating since Q1 of 2024, the fleet consists of 1,900 H100 and H200 GPUs that were purchased for a total of $75 million. They guided toward a 2-year hardware payback period, and you can see that in the screenshot that's attached here. They said around a 24-month payback period on these GPUs. However, we can do the math. They put out their financials. After 17 months in operation, Iron has generated just $18.6 million in gross profit. And this fleet is operating at full utilization right now and generating around $2.1 million in gross profit every month. So we can extrapolate that out for the remaining months of the projected 24-month hardware payback period and find that total gross profits will be just $35 million. Remember, the original investment into these GPUs cost the company $75 million. And they projected that they would be able to pay back their hardware in 24 months. But after 24 months, they'll pay back less than half of the original investment of $75 million. So based on this, the actual payback period will fall between 4 and 5 years, which aligns with Iron's projected useful life for their GPUs. So while Iron is flaunting these 95% plus hardware margins, which, yeah, that's fantastic, none of that margin, none of those profits will go to shareholders. All of that's going to paying back the hardware. And this is a problem. It's a never-ending arms race. They just announced a few weeks ago that they're investing $130 million into the new generation, the Blackwell chips from NVIDIA. Unfortunately, this fleet is probably going to fall to the same demise. There's so many dollars of investment going into AI right now, and it makes sense that investors would get so excited about it. But again, at a certain point, you have to start to wonder about profitability and profits. Otherwise, this isn't sustainable. And you know what? It's been in the headlines recently that the hyperscalers that Iron is chasing after, for example, they're building their own power generation because they don't want to be relying on the United States power grid, which is very, very shoddy. You can't rely on the United States power grid to power your high-performance computing or AI applications because you need 99.99999% uptime, and you're just not going to get that with the United States power grid. So Iron's supposed moat of grid connectivity of more than 1 gigawatt, that's not a moat. That defeats the purpose of their moat if these hyperscalers that they're chasing after are building their own power generation. And if there is money to be made in owning the GPUs, the hyperscalers are going to go do that themselves because they have the capital to do so. So they're going to maximize their own return on investment. Why would they sacrifice their margins to pay Iron to do the business for them? That doesn't make any sense. So that leaves the lower quality tenants as Iron's potential tenant base. And these lower quality tenants, most of them lack revenues at all. And even more of them lack profitability, and very few of them have any sort of runway to profitability, which means they're 100% reliant on additional financing to pay their bill to Iron, which again, in a bear market or a recession, gets dicey. How is a startup company that's reliant on new venture capital going to pay their bill to Iron if we're in a recession or we're going through a bear market? That's the risk at play here that the markets just don't care about. They're not paying attention to because, well, all of the money's flowing into AI, but nobody cares about profits right now. That's why there's reports of speculative trading reaching all-time highs, because that's exactly what's happening. Investors don't care about profits. How much are we paying for Palantir stock? I mean, it's an insane multiple. And yes, over time, can Palantir grow into that valuation? Absolutely. They can, but it is an outrageous valuation right now. So I know I've been on a little bit of a tangent when it comes to these Bitcoin treasury companies and AI and investors chasing the hype around those two areas of the stock market. But we have to think of this from CleanSpark's perspective. If CleanSpark knows that neither strategy is really sustainable, at least the way it looks right now, how much do you want to chase the hype if it won't lead to sustained profits that you can return to shareholders? How much do you want to chase the hype? If you want to be the adult in the room and you know you have a very, very healthy business model today, how much do you want to change up that business model just because investors aren't paying the premium they maybe should right now? To me, and as somebody that thinks fundamentally and operationally, I don't want to change much of what my company does. And I think CleanSpark thinks the same way. Why would we chase the hype just to get people to buy our stocks so that we can disappoint them over the long term when we don't deliver for them? It turns out that CleanSpark doesn't even have an active dilution program right now. They have zero dilution. And it turns out when you have zero dilution, you are much more, let's say, frugal with how you spend your money. You're much more careful with where you invest your money as a company. And that is to the benefit of shareholders. These executives that are taking out hundreds of millions of dollars to go buy their mansions on the beach, that's not helping shareholders. In fact, that's just management teams enriching themselves off of shareholders despite having zero profits. Now, I have to be honest, there are a couple of things that I think CleanSpark can do a lot better that will ultimately help their share price perform even better over time. I think they're doing a tremendous job on the operational front. I think they're doing a tremendous job when it comes to the fundamentals of the company. They're doing tremendous. Now, the storytelling behind that maybe is lacking a little bit. We've seen institutional ownership skyrocket for CleanSpark, which is a very, very good thing. I think CleanSpark is doing a great job of reaching out to institutional investors, getting them interested in their company, telling their story. But I think CleanSpark has almost gone too far away from the retail investor. They say, well, yeah, we don't want to be the speculative or the risky company anymore. We want to be the adult in the room. But in doing so, they've somewhat started to ignore the retail investor. And that's just me being honest. And I don't think that's been the most beneficial for them. Here's the deal. If we know that these other two strategies that have been pulling capital away from CleanSpark are unsustainable, at least if we know that they're unsustainable in the manner of outperforming stock prices forever, if we know that that's not going to last forever, there's going to come a time where capital is looking to exit those positions and go somewhere else. And CleanSpark needs to be there to pick up that capital. How can they do that? Well, there's a couple of things that I want them to focus on. First of all, they need to start bragging that they're the only non-exchange publicly traded company that is accumulating Bitcoin on their balance sheet without dilution and without taking on more debt. They are the only publicly traded company in the world that can make that claim. And investors, there's capital out there that's looking for a company like that has operating leverage and that is accumulating that Bitcoin without diluting shareholders, without taking on or leveraging up the balance sheet with debt. And then second, CleanSpark needs to start bragging about their low cost basis on their Bitcoin HODL balance. I don't know the internal number, but I'm guessing they do. But I do know that CleanSpark has the lowest cost basis on their Bitcoin HODL balance of any company in the world that is publicly traded. This is because they can accumulate Bitcoin for less than spot prices. And they need to make it very clear to investors that we don't want you to pay a premium for our company because we have Bitcoin torque and we're a crypto reactor. And we don't want you to pay a premium for our company because we'll increase your Bitcoin per share over time, which actually is unsustainable. You'd be better off buying your own Bitcoin. But we want you to buy our company and start paying a premium for our company because we have operating leverage, because we can acquire Bitcoin for less than spot prices, and because fundamentally and operationally, we have an operational business that accumulates this Bitcoin for less than spot prices, which is a fundamental reason to pay a premium for a company. We do something that no other company in the world can do, and that no other company in the world is demonstrating right now. And then as that operating leverage grows over time, which is inevitable in my opinion, they need to start highlighting that and using that capital, those profits, and returning that capital to shareholders through share buybacks. Bitfarms just announced a share buyback program last week. And a little bit different circumstances there. They're trying to fend off what was a hostile takeover, and now that hostile takeover bid they're selling out of their position, so it's putting negative pressure on their stock price. It's a little bit different scenario for CleanSpark, but Bitfarms had a very positive reaction to that announcement. And that shows you that there is capital out there looking for a Bitcoin strategy that is the opposite of what MicroStrategy and Michael Saylor is selling to you. There's capital out there that's looking for a sustainable Bitcoin accumulating engine. And that's what CleanSpark is. And like I said earlier, if you're going to tell your shareholders that your stock is going to outperform Bitcoin over time, it makes more sense to buy your own company than sell your own company. The Michael Saylor approach, again, doesn't make much sense. Why would you sell shares of MicroStrategy if it's going to outperform Bitcoin? And another thing that CleanSpark is doing that other companies aren't is they have a digital asset management team. CleanSpark, the company, they're selling 2/3 of their monthly Bitcoin production to cover their operating expenses because, again, they're not diluting shareholders. They're not leveraging up the balance sheet to pay their bills. They're selling their production, and they're able to hold on to 1/3 of it to add to their HODL balance. But because they know they're going to be selling Bitcoin to cover operating expenses, their digital asset management team can now go out and sell calls on the Bitcoin they plan to sell anyways. So they'll just rake in premiums on Bitcoin they plan to sell anyways. So either it gets called away at higher prices than today, or it gets called away at current prices or maybe lower, and you rake in the premium, which helps with your margins, helps with your operating leverage, helps with the amount of capital you can return to shareholders. The digital asset management team can also utilize callers, where they sell a call option and they buy a put on Bitcoin, on the Bitcoin they have held as collateral, to protect their downside in the case that we have extreme volatility to the downside in the price of Bitcoin. they won't go bankrupt while all these other companies do. And then lastly, there's deals like these that CleanSpark is making. CleanSpark has leverage on their suppliers. That doesn't exist in the AI space. That doesn't exist in the Bitcoin treasury space. CleanSpark negotiated with their supplier Bitmain a 15% conversion premium to the spot price of Bitcoin if they bought these 13,200 miners with Bitcoin. And on top of that, CleanSpark received a free call option to buy back the Bitcoin for $110,900 at some point in the future. And we all know that Bitcoin is trading at much more than $110,000 today. So this free call option is now in the money. They've made $9,000 per coin. And you can do the math. 9,000 times 691 Bitcoin definitely makes a difference. So CleanSpark could say, all right, we'll go ahead and exercise this call option. We'll go ahead and turn around and sell the Bitcoin right away and take in our income and our profits there. Or they could say, well, we know this is in the money by a lot, and we know we're going to sell the Bitcoin anyway to, well, take advantage of the profits that have accumulated under this call option that's now in the money. And we can do the same strategy of selling calls on this Bitcoin to rake in an additional premium on top of the premium that this option is already trading at. And again, that is difference-making capital that is going straight to the bottom line of the company. Now, let's go ahead and discuss what I think this earnings report is going to look like. We know that CleanSpark is likely to report their earnings in the first week or two of August. And I've done my math here. I spent all the last 2 days putting the spreadsheet together, putting my estimates together. And I have the company delivering revenues of $199 million for the quarter, with cost of revenues at $85.1 million, which actually is a reduction from the previous quarter. And you can see the math I did here, where I calculated their total energy expense and their cost of energy per Bitcoin mined. Somewhat complicated, but if you know the different conversions, you can do this math and figure out how many kilowatt hours CleanSpark utilized during the quarter. And you can estimate their cost per kilowatt hour, and that's where you get the total energy expense. And we know that CleanSpark no longer is with CoinMint, so they don't have any Bitcoin miners that are hosted elsewhere. So it's likely that my cost of revenue number here is going to be very, very close to what is actually reported. Now, the rest of the line items, I'm a little bit more uncertain on. I've just based my estimates on the historical comparisons to the previous quarter. Obviously, depreciation is going to pick up a little bit, and it's going to be very, very tight. I personally don't have CleanSpark delivering profits from operations. I have them delivering a slight loss from operations, a very, very narrow margin, but ultimately it's going to depend on what the rest of these line items end up being. There is a chance that CleanSpark will come in and deliver profits from operations, excluding the gain on the fair value of Bitcoin, which would be a very, very welcome development in my personal opinion, because that does include depreciation, which is technically a non-cash expense. And if you include depreciation, you probably should include the gain on fair value of Bitcoin. Now, this is where it gets exciting. CleanSpark's gain on the fair value of their Bitcoin is going to be around $310 million this quarter. And they're going to be one of the first Bitcoin-related companies to report their earnings. They always are. And because of that, they're going to report a net income of $307 million, or earnings per share of $1.09, which is very, very high. That compares to Wall Street estimates of $194.87 million, so I have them beating on the top line. And Wall Street only has the company delivering 7 cents of earnings per share, and I have them delivering over $1. So I think this is going to be a double beat, and I think the algorithms that trade on the headline numbers are going to reward CleanSpark stock tremendously. But again, knock on wood, don't have a crystal ball. I really don't know. This is based on what I've noticed over the previous 3 or 4 quarters. The algorithms still have not caught up to the Bitcoin-related companies, especially the Bitcoin mining companies. And I think the algos are going to come in and buy CleanSpark in a frenzy after hours. Again, I'm not a short-term trader. I'm not a short-term investor. I might end up buying some call options just for fun going into the earnings report, and we'll see if those end up being profitable or not. But you can join the membership. I put all my buy and sell alerts in there, including my call options. And you also get access to the spreadsheet that I'm showing you today, so you can change your own numbers. So based on this quarter, what I like to do is always update this every quarter, where I take my forward 12-month price target for the company. And based on this, I have the company delivering over $1 billion in revenue over the coming 12 months, And I have them delivering operating income of over $200 million over the coming 12 months. We'll see if I'm close or not. I'll keep chaining this spreadsheet with all the new numbers we get. And I have them delivering adjusted EBITDA of $626 million, which if you assign an 8 trading multiple to that and add in their cash and their HODL balance and subtract out their debt, I have the fair value of the company sitting at $23.08, which means today the company is undervalued by 95% in my personal opinion. Now, what gets really exciting is this is where a lot of profits are going to come from over time. I don't think it's going to be this year, but maybe 2026, 2027. If you guide to just a 4% yield on CleanSpark's HODL balance, if the digital asset management team can attain a 4% yield on the total HODL balance, you're looking at $100 million plus of additional income going to the bottom line for shareholders, which gets very, very exciting because then you start to ponder, well, yeah, will the company do a share buyback? Obviously, they'll use that to pay the bills first and maybe for some growth to refresh their fleet every 4 years. But there's opportunity that's just now, we're kind of at an inflection point for the company. I don't think the markets realize it. Again, they're much more fascinated with the hypey, risky investments right now. They don't really care about profits and what's going on under the table at the company's operations. CleanSpark actually has an operational business that's delivering profits. But the markets don't care right now. But again, that's presenting opportunity for shareholders. So yes, if I had to give you a price target today, I would say that CleanSpark, their fair value is $23 per share. And that's actually right around where Wall Street has it as well, the $20 to $25 range. So I think that the upside for CleanSpark from here is still tremendous. And this price target is only assuming a Bitcoin price of $130,000. If Bitcoin continues to appreciate, my price target will also continue to appreciate over time. But anyways, I hope you guys enjoyed this video. I hope this is helpful to you. If you're new here or turning in again and not yet subscribed, please subscribe down below. Leave me a comment and hit that like button. I hope you have a great rest of your day. Stay blessed. Keep 10 toes to the ground. Your chin up. Peace out.